Today, I am so excited to invite Jennifer from Common Ground Healthcare Cooperative. Now, I know Wisconsin is, I brag about it all the time. We're really lucky because we've got more nonprofits than I think any other state. We've got more carriers than like one other state's got more on our exchange. So we are pretty spoiled. I know there's many of you here that are like, I hope you like this carrier because that's your option. And Wisconsin is kind of unique where it's got a lot of them. But there are some states that aren't necessarily United Healthcare or Anthem, and you have some small carriers that you can go to. Get to know them. Go find out who the broker support people are. Ask them if you can come to their shop and meet them if you live close by, or have a Zoom with them, because that relationship is invaluable. So Common Ground has been a part of the Wisconsin since 2013 marketplace when we were starting. So we were right there at the start. Common Ground was with us. And so we've had a great relationship with them since 2013. And they've seen some changes on our end as we've grown. We've seen changes on their end as they've grown and changed and expanded. And they're, we would say, one of the most stable carriers in our state. They kind of found their niche. And so I asked Jennifer to come on and explain what the carriers go through, because I know a lot of you don't have that relationship with the carrier. United Healthcare is not necessarily going to tell you what they do. If you're lucky if you can get the same person on the phone, right? So Jennifer, welcome. I wanted to ask you, how long have you been in health insurance?
Oh, that's a loaded question. I've been in and out of health insurance for probably about 15 years, but I've always been on the the health space, either on the provider side or on the insurance side. So I've gone back and forth. I was on the individual side pre-ACA, so I remember the underwriting of individuals and having to say, no, we're unfortunately unable to cover you. So seen a lot of good things come from the ACA.
Excellent. Us too. I mean, is it perfect? No, but I think it's better than what it was. It just now needs to be tweaked so it can be better than it is now. All right, well, take it away. I know she's provided a PowerPoint. You can ask your questions, but hold off, and then we'll have time afterwards too to, unmute yourself and ask any questions you have.
Thank you, Chris. So as you mentioned, I'm going to give you a carrier perspective of how we look at individual and family plans every year, how we work with CMS, as well as some other things that we are working on to really help improve our members' experience. So I'm just gonna, let's see. I'm Vice President of Business Development for Common Ground. I've been with Common Ground just about 3 years. I oversee product marketing and sales and agent relationships. So it's kind of the whole spectrum. My job is kind of like a wheel. I'm always looking at developing new products and what we're going to offer, and then we're going to figure out how we're going to promote them. And then we're going to figure out how we're going to work with agents to make sure that they understand our plans that we have every year. So Common Ground was created in 2012. It's actually right now a co-op. It's a federally consumer operated and oriented plan. These were created back at the beginning of the ACA to create qualified nonprofit health insurers to offer competitive plans in the individual and small group space. There were 23 of them at that point. There are 3 remaining. Common Ground is the one of the 3. We are proud to say we are one of the most successful out of all 23. We're one of the only ones that have made payments back on our loan. We are going to be exiting the co-op at the end of this year. We will officially pay off our loan to the federal government. And one of the reasons why we're doing that is it gives us an opportunity to grow into some other areas. But the one key thing that will always remain, because we started out as a federal co-op, we will always remain a nonprofit health insurance company. So
where are the other 2? Do you know where the other 2 co-ops are?
One is still in Montana, and the other one is in the Northeast. I want to say like Vermont, New Hampshire.
That area. And there's a
But
whole
those
long story about why there's only 3 left of the 23. We can go into some conspiracies
that'll
and
be a whole
rumors,
other
but
presentation.
yeah, but uh
Um, but we do offer on and off exchange plans in eastern Wisconsin. And we are currently the largest ACA carrier in Wisconsin. So we have approximately 60,000 members. And that we've been in the ACA from the beginning since it launched, where we've seen a lot of the national carriers, Anthem, United, come in, drop out, go back in, and wreak havoc on the marketplace. But we'd like to state that we've been very stable and have been there for our members from the beginning. So that's a little background on Common Ground. So what I'm going to cover today is give you one carrier's open enrollment planning process. I'm not saying that this is how other carriers go through, but I think from a high level framework, it's going to give you a little understanding of why sometimes carriers are completely off on the plans that they offer or pricing. And you'll understand a little bit why and how that may happen. I'll also go into how we decide what plans to develop. We take feedback from a lot of different areas, but some of it it's not under our control on what we can offer, and I'll explain a little bit about that. The fun topic that everyone loves, how we engage with CMS. We all have to call into the FFM occasionally. We'll share with you how we interact with the FFM and CMS and what information we get from them and what information we do provide them. And then one of the hot topic issues right now is uncovering fraud. Common Ground started seeing areas of concern last year with our membership. And so we started a process to really assist our members or individuals who became our members, unfortunately, because of fraud, to really help guide them to make sure that they were getting the support they needed in working with the CMS, the FFM, and the local states, Office of Commissioner of Insurance, to make sure that they were getting the support that they needed. And then I'll wrap it up with Q&A. Feel free to ask me any questions. I'll try to answer them. If not, I also do have Jen Wenner on my team, who's also on the call, who does support and work with a lot of agents and brokers in the state of Wisconsin. So open enrollment, it's an interesting process. You think open enrollment, oh, you must be working on creating your plans right now for 2025. No, actually, we started working on that in November of 23. That's when this notice of benefit and payment parameters comes out from HHS, and they kind of share what their proposed rules are going to be for 2025. So this is in the middle of open enrollment 2023. We are thinking about 2025 when we start reading that. And I'll go into a little bit detail on what we learn about in those notice of benefit and payment parameters, also known as NBPP. It'll give you a little bit of an understanding of kind of the headaches that a carrier goes through when those come out. So those come out, we kind of look at them. Again, it's only proposed. There could be a lot of changes that come. But then in the next couple of months, what we start to do is we look at what happened during open enrollment 2024. We take a look at what plans we sold, what ones did not sell, where did we think we captured membership, discuss what our competitors did. Start to put together some ideas of what we want to see for 2025. Then the final rule comes out from HHS that will tell us what we can and cannot do. So some changes may have occurred, so we have to adapt. And then finally, we start to take a look at how we set pricing. Then in April and July, so right now, our teams are working on what we call the QHP process, which is the Qualified Health Plan Development. So that requires us to submit applications, enter in our plan design, pricing, and other required forms and templates that are required by CMS in order for us to submit our plans. And then we go through a testing of that. So we enter all that data in, we get warnings back, we get things that get popped out, we test it, we work with CMS to find out why it's not working. And we continue to go through that process through July. between August and September, CMS finally says, yep, you're good to go. Everything looks great. Or you've got changes, you got to make them, or you're not going to have a plan on the marketplace. At that same time is when we can finally start to build into our own internal systems the plans we're going to offer. And we also start to do enrollment planning. So we start to think about how we're going to market these, where we're going to go. But you got to remember at this point in time, we have no understanding of what our competitors are doing. So we're kind of going in this blind. We're going in with what we think we're going to be competitive in and what we think our competitors are going to have. We all eagerly wait for October 2024 when window shopping opens, because that's when we as carriers get the first glance into, oh my God, we missed the mark, or, oh, we're going to do pretty good in these markets or these rating areas. And then we all know the fun begins again in November or January for open enrollment. But you got to remember, we're going to be thinking about 2026 when November 2024 comes around. So we'll be back into that cycle of circus again of kind of thinking about what are we going to do for 2026. So I mentioned the notice of benefit and payment parameters. If you ever had to read read the CMS guidelines, it's a little confusing. They talk kind of around in a circle. But they're supposed to be the roadmap for us as carriers to really kind of set the course of what we're going to have to do for that particular year's plans. But it's not always clear. And it's definitely a lot of uncertainty. So between what they propose and what's final, you're really not quite sure what's going to happen. And I'll bring up a situation that happened last year when the MVPP came out and said, yes, we are going to limit the number of plans you're going to have, and you can go to 5 plans. The following year, we are saying you can only go to 3 plans, but we're not sure if that's going to happen. So just go with your 5 without knowing if you're going to have to go down to 3 in the following. So for us internally, it's kind of taking a look at, okay, we've got all these plans that we've created over time because of feedback that we've gotten from members and agents, but now we've got to narrow it down, and we don't have the ability to really identify kind of what things we need to have in those plans. At the same time last year, the standard plans were introduced. So we had to introduce the standard plan, and that had to be the defined plan that was already determined by CMS. So we had to take a look at what we currently offered. Is there overlap? How did we have to modify what we currently offered? And then the big part of crosswalking membership. So if we had existing members in one plan that was going away, we would have to crosswalk them into another plan. So we had a lot of kind of issues we had to think of when we were looking at the NVPP. Every year they cover a bunch of topics. Here are some examples of topics that were covered in this year. Network adequacy requirements. So they're always looking at whether or not each plan and carrier has a large enough network to be able to provide the level of care that they need for that county or rating area. They talk about essential health benefit decisions, what needs to be required. There's also the state requirements that you have to also take into consideration when you're looking at what you're going to develop for your plan. As I stated, they limit the number of plan options. So this year we did go down to, you can have for each meta level, 1 standard plan and 2 non-standard plans. So a total of 3 plans per meta level. They also dictate what you have to require as you part of your standard plan. They also let you know what's going to be open enrollment, what's going to be the special enrollment periods. A few years ago, when they opened up special enrollments to allow anybody who is under a certain FPL to have an open enrollment all year long, that as a carrier meant we had to adjust and understand when our membership would come in. They come up with the enrollment standards. Last year, they started sharing a lot more requirements for you as agents of what was required of you in order to take on an individual as your client and what you had to document and what you had to make sure that you were sharing. Then, as we're always eager to look, what required fees are we as a carrier going to be required to put into our plans or cover as part of our plan offering, which then ultimately goes into our pricing decisions as well. So that's just the notice of benefit and payment parameters. Just that document that comes out every November as a draft, every April as a final, really kind of sets the tone on kind of where we go as a carrier on developing.
They give you something in November, but then go, we might throw it all out, and who knows what it'll be in April.
Yes, correct.
You have to plan for all contingencies, but then be able to adjust. So
Correct.
yeah, fun, good
And
time.
the thing also with the benefit payment parameters, they allow comments. So every carrier, every government official can submit comments if they agree or disagree or want to see things changed. So you kind of start to get the flavor of, you think something's going to not pass or pass because of what's in there and based on the feedback you're getting, but you never really know until the final comes out and it's been voted on. So it's a very government-based process for approving. And that we as carriers kind of sit and wait and plan scenario A, scenario B, scenario C to kind of figure out what we're going to do and what our options may be.
So for next open enrollment for 25, you guys are really going to have to figure out if the income cliff comes back versus if the income cliff doesn't, which is a huge thing. I mean,
correct.
So
all of that goes into our projections on what we think we'll get for membership, which has to go into our pricing. Also the cost of care. So there's a lot of variables that we're taking a look at. And this is the start of it. This is the framework that kind of starts our journey in November, 13 months prior to open enrollment. But then when we finally get all this, it's like, okay, now we have some ability to create new plans or modify the plans that we have. And I wish I could say that there is a solid process to doing it. It's not. It's a little bit of science, a little bit of art, a little bit of gut reaction of what do we need. But I will tell you, as Common Ground Healthcare, we listen to our members. We want to know what they like, what they don't like. We listen to their feedback all year long. We do surveys. We talk to our agents that sell our products and say, what do you like? What do you don't like? What is confusing? Do we need to change the wording of our plans and how we position them? So we really do listen to our members. And then we take that feedback into trying to take a look at how we fit within the NBPP requirements of what we can offer. Then we take a look at our plan performance, our medical loss ratios. If a plan is performing poorly, why? What do we need to do differently? If we're not seeing membership come into a plan that we thought we were going to be able to grow, why is that? And when does that membership come in and how does it come in? We take a look at our competitor plans. What are they offering? What do they have that's unique or that we should be considering? So it's kind of a look at everything and then putting it all in together from a financial standpoint, as well as from a utilization standpoint, from an actual enrollment standpoint of what can we have or what should we have. The very end, we get this thing called actuarial value, or AV, as we call it, and on the carrier side. CMS has said that each meta level has to sit within a certain range of actuarial value. So that's the total average cost of a covered benefit that a plan will cover. That includes the deductible, the maximum out-of-pocket costs. So for a bronze plans, they have to be with like around 60%. And then the silver plans, and then the gold plans, and then the platinum plans. They have to offer a certain actuarial value.
Is that value, so it's 60%, is it supposed to be the plan will cover about 60% of the expenses for the person who has it, right? The member. And in theory, a gold plan covers 80%.
Correct.
Okay.
Correct.
Whether it does or doesn't, but that's the theory.
Yes.
Okay.
Yes. That's the theory. And you're putting in medical cost trend, utilization. You're looking at all of that to kind of come up with the actuarial value of your plan. There's a calculator you have to run it through that CMS creates, and it pops out what your actuarial value is. And you can be within a range, 1% above or 1% below. You cannot be any farther than that. If it is farther than that, that plan fails and you have to go back to the drawing board and take a look. You have to move things around, move the deductible, max amount out of pocket, maybe a copay. So it's really trying to figure out what is going to work to sit within the AV calculation.
So for those of you who have those $0 deductible bronze plans in the states that have those, you'll be like, oh, this copay for the doctor's $40, but the ER copay is $2,000. Why? Well, in order to make it 60%, it can't be too rich. If it's too rich, it gets moved into a silver or to a gold. So that's why they have to, like, you'll see one carrier, maybe their copays for regular doctors and specialists are a little bit more expensive and maybe their ER is a little less, and vice versa with another one, or suddenly the copay in an odd one, the imaging is higher with this carrier, but not this one. It's because they're all trying to figure out exactly how much they can offer without going over that percentage.
That's a perfect example. And, it's something that we had a lot of discussion about on our $0 premium plans or $0 deductible plans. Is individuals, we want to make sure that individuals are able to go to the primary care and that make that affordable. So we wanted to make our primary care visits as low as possible, but that also meant that our ER visits may be more in order to offset the value of what we're giving to our members from a lower primary care visit. And it all depends on the populations you serve, the utilization, and then you as a carrier, where you are encouraging your member population to access care. And it's never exact, never exact.
And it's never as good as we want, but we're all like, hey, give us the bronze $0 deductible and everything is like less than $100, but then that would be a gold plan or a platinum, which are pretty much, most people don't have. There's not very many platinums I see anymore, but.
Oh, no, there's not. All right. So the fun topic, engaging with CMS. This is
you enjoy it as much as we enjoy it, I'm sure.
Oh, it's been very interesting. So first of all enrollments, regardless of how you enroll, if you enroll with healthcare.gov, you go through FFM, you go to a carrier direct, you do enhanced direct enrollment platforms, everything goes back to CMS, who then turns around and sends the information to the carrier. We cannot identify or state that the person has enrolled in a plan until we get that information from CMS. A lot of times we'll get calls from members going, oh, I just signed up the plan, and I have a question. You don't see it. There's no visibility for us to see it unless they come to our website and do it direct. We can see that an application's been submitted, but it is not anywhere near being into our system as an enrollment until CMS has sent that information to us in what's called an 834 file.
I think I remember it said they had up to 7 business days, right?
Yeah.
I mean, I know it doesn't usually take that long, but they do have up to 7. So it can be 3 days, it can be 24 hours, it can.
Yes.
No consistency.
And it all depends on the change. Enrollments typically go a little quicker. Changes are a different story. So we get lots of calls to our member service team as well as our broker support team saying, oh, my client moved and we need to change the address. We wish we could change the address for you.
Yes,
we wish we could change the email, or that they got married and then changed their last name. Unfortunately, all of those changes need to go through the FFM. So you either do it online, you call, or the enhanced direct enrollment platform. Some of them have the ability to make those changes. Unfortunately, a carrier cannot, and that's always really challenging for individuals, especially when they're calling to say, oh, I'm moving on to Medicare. I'm calling to terminate my plan. Great. Unfortunately, you need to call CMS to terminate your plan. There's nothing we can do as a carrier to do that. We can't add spouses or dependents. All of that has to go through that formal process of going back through CMS.
We learned this back in 2014 when we first started doing this, and that's how Common Ground learned that they couldn't. It's not that they don't have the ability, right? They can type it into the members' information, but CMS is constantly resending the packets. And so they would type in the new address, but then the CMS's packet with the old would come in and it just overrides it. And so it was a constant struggle. So you just let your clients know any changes, call me, because what they call the carriers, and then the carrier says here, and they connect them to healthcare.gov, and then we don't know what the heck happens, right? Sometimes it's done correctly and sometimes it's not. But and it doesn't make sense. I get it. We're telling our clients, call your carrier for all your needs, except when you need to change anything about yourself, right? Yeah, that doesn't make sense. But they just can't, because it's not like CMS sends it once. It's a constant update of that packet of information.
It's, yes, definitely constant. And as a carrier, it gets frustrating for us because we're trying to service our members who are saying, well, I changed my address, or I called and I want to add my spouse, and I called FFM and I added them, but they're not showing up on the portal. I can't get an ID card. And we're like, we understand, we haven't gotten the information yet. We are waiting for that information, or we see it coming over. Sometimes we can see it in a report before it hits us, and we're able to say, we see it coming. It's not here yet. Call back in a day or two. Well, or check your member portal in a day or two. You hopefully will be able to pull down the ID card or make a payment or whatever it is that you need to do. But unfortunately, we just can't make those changes. Disputes and errors. If there's an error in the enrollment, maybe you misspelled their name. Again, that's going to have to go back to the FFM. Terminations because of lack of payment. If an individual misses their grace period and is termed because of lack of payment, we cannot reinstate them without the FFM approving it. So the individual needs to go back to healthcare.gov, submit a case or a request that says, for whatever reason, why they were not able to make that payment, and see if CMS will accept it.
And the grace period is 90 days if they get a tax credit. If they don't get a tax credit, it's 30 days, correct?
Correct.
And I do know some carriers, it's actually 1 week. It's 7 days if there's no tax credit. So
yeah,
Todd and I from down next to you, he and I had a discussion. I'm like, no, it's not 90 days if they don't get a tax credit. I think Common Ground does 30 and a couple others, but I know a couple others, it's a week. So, but we don't typically tell our people they've got 90 days, because then they get so far behind that then they don't have 90. If they can't pay it 1 month or 2 months behind, are they going to be able to pay 3 months behind? So I don't usually share that with people. If they ask, I'll tell them, but we tell them, don't worry, it's a grace period, because people will panic. Oh my goodness, I'm 5 days late and I'm going to lose my insurance. And we're like, no, you have grace. But you can terminate them. You can send that back to CMS. We've had 3 months of no payment. Now we're terminating it back to the beginning. That's one of the things you can send back to CMS. So do you have to report each month that there has been a payment?
Correct.
Okay.
Each month we report. So all of that, just as CMS is sending us files, we are sending files back to them on whether or not we've received payment, whether somebody's in grace. All of that information is shared back to CMS related to their plan. But the requirements for grace are set by CMS. So we technically cannot deviate. We can't give one individual special treatment over another individual. That is only CMS can do that. The CMS can tell us, yes, you can reinstate this person because for whatever their cause of the termination was appropriate. or inappropriate, and we would reinstate them. Also, if there's fraud situations, if a member was moved, a member was enrolled in a plan, again, we can't terminate a plan, and I'll talk a little bit more on another slide about the fraud. We can't terminate a member when they call us and say, I never signed up for your plan. I don't know who signed me up. I don't know that person, the agent that's on my account. I want this plan canceled. We as a carrier cannot terminate. What we do is we encourage the individual to file a HICS case or health insurance caseworker system case to identify that fraud. But there's nothing that we can do to terminate that plan. And as I said, carriers, we get nightly files from CMS. Again, you would think there'd be some standard, information's put in and 12 hours later you're going to get it. It doesn't happen that way. It seems like adding spouses and dependents and special enrollment periods and terminations take longer to come over. New enrollments seem to be a little bit cleaner, and we typically get them the next day. I should knock on wood, and hopefully that continues to remain that way. But changes, and I have a feeling some of these changes might start to take a little bit longer, especially with some of the fraud situations that are occurring. I think CMS is going to probably put some more parameters around kind of taking a look at those changes and making sure that they're legitimate.
So it's something we got to let our clients know, because we're changing an application. You might not see it for a week. It's not instantaneous, even more so than new. That's interesting. I would think that changes and stuff and terminations would be faster because the system's already there, right? The packets of information's there. But so somebody at CMS of some sort, or, I don't know, their version of AI is actually looking at those before they send it, or.
That's, in some of the conversations I've been part of, they haven't shared exactly what they're starting to do, but they're starting to take a look at some of the processes that they have in place related to some of these changes, and using AI to take a look at it, so I can only hope. One of the things that we really see, especially with the terminations as they relate to Medicare, an individual rolling off and going into Medicare, those have to be done through the FFM. So we don't always get notified in a timely manner. So sometimes another invoice will go out for that member. The member will call in and say, well, I terminated with CMS. We understand. We know that happens. There's no concern. As long as that member has definitely terminated with CMS, we know at some point it will come over and we'll correct the invoice. There's not going to be dollars owed. But I know that's always a really kind of a challenging point for individuals, because they're like, wait a minute, I'm not supposed to be billed anymore.
The other question that comes up, so if somebody calls CMS, whether it's an agent or an individual for Medicare, if they call on the 15th and then the CMS person doesn't know what they're doing at .gov, it terminates them on the 15th. And so suddenly they're with 15 days without coverage, right? Or they say you have to call back on the last day of the month. Now, I found a workaround on Health Sherpa. You guys need the workaround, I'll tell you, but so that I can start giving you those ahead of time, but it's only through Health Sherpa. I haven't tested it on any of the other enrollment platforms. But that's part of that issue, is that we can't, the CMS, .gov is so antiquated that we can't do things ahead of time. And so, yes, so just, let your person know, we run a quote, or I'd run a quote saying, all right, this is what the cost should be when it's only, Bob on there and Susie's on Medicare. So you're going to get that wrong premium. Don't worry about it. Just send the right one. And by the time they get that payment, it'll all be fixed, so.
If a situation happens where the member does get terminated too early because of calling in to the FFM, reach back out to the FFM and file a request to change that date. Yeah. Because there's no reason. I mean, if it's definitely an error on the FFM part, those typically will get overturned, and the member can continue to get their 15 days of coverage, and we'll work with them to make sure, but we see that happen a lot.
Yeah, I'm sure.
Definitely very interesting. So you brought up, and actually, Chris, you brought up a situation when you have a spouse situation where one of them moves off into Medicare. There's some helpful hints here if you haven't already talked about it. Put the youngest spouse on the app as a subscriber.
Yeah.
That's going to save you as an agent a lot of work in the future, because when that individual, the older individual, ages off, you just have to remove them. You don't have to cancel the entire plan and reapply with the younger spouse. The other thing is to
Just so
make
you
sure.
know,
Yeah.
we don't cancel the plan. The system is doing that.
Oh,
Because
yeah,
we
well,
just go in and see, she doesn't know what we see on our side. So on Health Sherpa, you're just unclicking the primary as needing coverage, and the system basically terminates that old application and creates a new one, and then it creates the new member number, and it's a hassle. They got to move the deductible over to the new person. But that's actually not us. We're not actually canceling. We're just
right.
updating. But yes, whoever's youngest or whoever's going on Medicare first. So if you have somebody who's
Okay.
disabled, make sure they're listed second.
The other thing, and we get a lot of calls related to this as well, is they will see a drastic change in their subsidy related to their APTC when one spouse goes off onto Medicare, because it does continue to look at the income of both spouses. So it'll be almost 60, sometimes 70% of the APTC will go away. And it's a big shock for individuals when they see that they have to start paying a lot of times much more premium for the plan they already had previously.
It goes up for bronze, stays even for silver, and goes down for gold. Yep.
It's all these little things that you can't predict until it happens, and then have to explain that. So, okay. So uncovering fraud. So this is something that as a carrier, we started noticing last year. And we had a lot of what we're going to call misinformed enrollment. These are individuals that had no idea how they enrolled. They were all on $0 premium plans. So they had a low enough FPL that their subsidy brought their premium down to $0, which meant they never had to effectuate their plan, and they were just enrolled in a plan. What we found is 99% of these individuals were what we call vet brokers. So not going to name names, but they're the ones that advertise on TV for discounts. You can get insurance for a cup of coffee a day. Well, in talking with these individuals, because what would happen is we started getting phone calls from pharmacies saying, hey, I have an individual in front of you, and they don't know that they have your insurance. They were previously on Medicaid or Medicare, but now they have your commercial insurance, and they have a copay on their prescription, and they don't know why they have your insurance. What we started finding out is that there were certain populations in our state that were being targeted. And these individuals were being enrolled in plans that they had no idea.
And it was pharmacists that alerted you.
Pharmacists, there were then doctors' offices would call us. Then we started getting individuals that would actually call us too and say, hey, I'm being told I have this plan with you. So we started taking a look at whether we were getting return mail back, because we send out everything. We send out ID cards in the mail. We send out emails if there's an email address, whether things were bouncing back. But things were still going through. But we did have a certain segment that was coming back. So we started tracking that to see, are there trends with certain agencies that these were coming from? Were there certain types of plans or geographies? And then we did some proactive outreach to individuals that were associated with these agencies, and just said, we want to make sure whether or not you're aware that you have a plan with Common Ground Healthcare, because there would be no other claims. There'd be nothing other than the fact that their plan was effectuated since they were all of them. So we created a process at that time, that we started to really assist those members that would call us to get them kind of off of our plan, which would require them to go back to file a Hicks case or an OCI, an Office of Commissioner of Insurance complaint. But we really weren't getting a lot of traction last year. We didn't know if it was just our plan. We didn't know if this was a nationwide thing. But then we started learning about this agent switching process. And I know Chris had a situation in particular, where we noticed we were able to pull reports to see whether there's agent movement amongst our membership. And we started seeing that we had some membership that was moving mid-year to a different agent. So we started doing a little bit more research and identifying what we're going to call the bad actors and putting them on a list to take a look at their membership, what types of plans they were selling, and whether we had any interaction with their members. And we found some things that were pretty disturbing on some situations, to the point now where we have, as an organization, we have made some decisions on the types of agents that we appoint to sell our products.
And you guys you don't contract with out of Wisconsin agents anymore, do you?
Border states, we will.
Okay, but not Florida.
Yes, we do still have some agencies that are grandfathered in that do have call center agents that are all over the country, but we do monitor that. We take every complaint serious in the fact that we have a process that we investigate. In reaching out to the member, we request the phone calls that are recorded. We listen to them. We file our own information back with OCI on our belief, and then we terminate agencies. We are actually in the process of terminating some large agencies right now. If you've read any of the media in Florida, there is a couple large web brokers that are being sued with a class action lawsuit held in Florida. That is the same agency that we've seen some issues with, that we've made the decision that we are terminating. We are unfortunately not able to terminate them for cause. There are certain requirements that OCI and CMS require that we aren't able to determine based on our investigation, because we don't have access to some of that information. So we're terminating them. So they're no longer able to continue to sell. But that doesn't mean that they're not able to sell other plans. So what we've seen is we've started to see some of these agents, when we terminate them, try to move members, because if they're below a certain FPL, they have a special enrollment period all year long. They can move them to another agency or another carrier to get paid a commission. So we have shared our thoughts with CMS and OCI related to, the lack of ability for us to determine fraud, that these agencies need to start determining the fraud of these organizations. So we've done our part, at least going back to these agencies and really assisting our own members with filing. We will help them file the paperwork as needed. We will give them the information and the phone numbers to call. We will warm transfer them. We will sit on the phone with them if they want that. But we really try to help them, but they have to be the one to file the case, or you as their agent of record needs to file that. One thing that we are going to do this year, and we are already starting, is we are starting to talk to our membership about enrolling during open enrollment with a trusted source. Don't just answer the phone call for someone you don't know. Don't just, respond to an ad you'll see on TV without ever seeing that person in face to face. In addition, we're developing policies and procedures within our own organization related to enrollment. So there are some carriers we've learned across the country who limit the ability of agents to AOR a policy after a certain date. Because if you think of an individual policy, they enroll at the beginning of the year, what is the likelihood that they're going to need to change agents in April? Very low.
Only time I see it is if there's a Medicare, right? Where they went to Bob's going to a Medicare agent and that Medicare agent goes, I'll take care of you. And I think, yeah, you can take care of them next year.
Yes. But if it's a individual who's, just a younger individual who's just using their plan, there's no reason that their agent needs to change mid-year.
Right.
Unless they call and say, I would like my agent changed.
Right.
So we're looking at exploring how we can implement some of those procedures that will really give our members the ability to be more in control and understand when changes are occurring. We are also looking at ways that we can ensure those members who sign up for $0 premium plans did in fact enroll in a $0 premium plan, that they're aware. So right now there's no effectuation process that automatically goes into effect because it's a $0 premium.
Right.
But we're exploring what else we can do to really reach out to those individuals to let them know that they have this plan. So you as upstanding agents and individuals that support members, our members and other carriers members, what can you do? Engage with your clients on a regular basis. Let them know that you're there to support them. Let them know that there is fraud out there. And that if they notice anything, that they should let you know. It's interesting how many times we talk to members who tell us they talk to an agent who's not actually their agent of record. They have no idea who the agent of record is. And then trying to go back and investigate all those situations and trying to figure out who really helped support that member. So really making sure that your member or your client knows you, knows how to get in touch with you, knows that if they have questions that they should call you first. Reach out to the support teams of the carriers. I can't speak for the large national companies on whether or not they support or on board with looking and making sure that they stop these fraudulent cases. But I can tell you the smaller regional carriers we're here for the members. We don't want members to go without care. And what we're seeing is we have members that don't know that they have our plans. We're not the right network for them. They use different health providers. We don't want to be their carrier because they're not the right member for us. We want to make sure that they're on a plan that they can utilize. So reach out to your support teams. We're here to help. We can tell you what we know, what we're learning, and help support any complaints that you do make to CMS or your Office of Commissioner of Insurance. And then provide feedback. If you're asked, I know CMS is starting to ask for feedback related to what people are seeing out there related to fraud. Make sure that you provide your feedback back to those organizations so that your voice is also being heard. I know Chris has recently filed a complaint that we were working with her on. And, we provided everything we could to OCI and everything that we had and explained to them why we weren't able to do certain things because it's not our place to state fraud because we can't determine fraud. Only they can determine that fraud. And it was great. Chris provided her feedback back to the organization to say, no, Common Ground has been working with us to help resolve this for my clients. So it's really important that they hear you guys as well. All right. Well, I hope that I was able to give you a little bit of, look inside the world of a carrier and kind of what we go through on an annual basis and developing plans and taking a look at, what we think members want. But I'm curious on whether or not you have any questions or have any additional thoughts that you would like to share.
So Gregory said, why can't deductibles and max out of pockets be the same for all income levels for the same plan? And I think, Gregory, what you're talking about is CSRs. So the cost
Yes.
sharing reductions in the silver, you're not going to get the same max and deductible for somebody who makes 20,000 and somebody who makes 50. You're just not gonna. So that's part of the silver plans, the CSRs, which I did do a deep dive into those silver CSRs. So you can check out my YouTube video and it just says understanding CSRs. But I think that's really what you're talking about. Because the only time it changes because of income is only in the silver plans, not the bronze or gold plans. Donna said, how do we terminate someone back to 5/1 if they forgot to terminate until 5/15 and have not paid the premium, the premium due for May?
Well, you have to terminate through the FFF. You can call and see if they will honor the 5/1 dates. It depends on who you talk to. But if they have not made a premium, we don't like to see this as a carrier. They can just not make their premium payments and we will terminate them back to 5/1. Obviously that's not the ideal way to do that. We will not come after the member for payment, but, we do encourage you try to get the termination back to term back to 5/1.
Now that brings up an interesting point. So you guys do not ask for any money back. There is a carrier in our system in Wisconsin that does ask for 1 month of the 3-month grace period. And I know it's Dean. Dean, and I don't know if they do now because they got bought by Medica, but Dean would charge for 1 month of the 3-month grace period. And I remember this, and this was like 2015, I think, when they found it, or 2016. Somewhere in the rules, it says that the carrier is allowed to ask for that, correct?
I didn't think we were allowed, at open enrollment, you're not allowed to go
Open
back.
enrollment, you're not correct, but
But
they've had it since April, and then they just stopped paying in April, May, June, that they would ask for April back. Because we used to tell people, because they would miss, oh, I'm a month, I forgot to pay, and I don't need to pay, and we would say that. And then Dean started asking for 1 month. And we were like, wait, what? And they found it, and I tried to look it up again, but they charge for 1 month. So most of them don't, but I have had a couple that's what's happened. So
yeah, it's asking for the payment. It's a lot of work internally. Sometimes it might even cost the carrier more.
more money right for the $12 that they're trying to get.
Yes,
But yeah,
exactly.
so Donna says she thinks Blue Cross of Blue Shield of North Carolina also asked for money
Okay.
back. So I know it's in the rule only because of what happened in 2014 with Dean. But they live in Madison and go through all the paperwork because that's the capital. Sharon, you have a question. You get your hand raised. You'll have to unmute yourself. And while we're waiting for that, Rob said,
Yeah, I think I just hit the hand, but I'm not asking a
oh,
question.
okay. However, the grace period doesn't apply at plan renewal, but it does, as far as I can tell. As long as it's the same, everything's renewing, that grace period absolutely does still apply.
Your plan does not become effectuated until you make the payment. So, if you don't make that payment prior to January 1, your plan isn't in effect. And then you don't have an ability after January 31st. If you miss it, there's no opportunity. Well, yeah, there's no opportunity to enroll, because you've missed your grace period and you haven't effectuated.
Yeah, so yeah. And the grace period, I know, John, you got your hand raised. The grace period that is always a little, so if somebody missed October, November, December, right? They've missed those 3 months, but they want to go with you in January. Can they? Or is it like, sorry,
No.
because you're still in the grace period when we hit the renew. So
If they're 3 months, if it's a 3-month, yes, but
yep.
it has to be, it's gonna be a new plan. And all plans end anyways on the 31st. So it would be a new plan on the 1st, and you wouldn't be able, unless you wanted to keep your current plan. And you could just re-enroll in a
I
new.
will let you know your system actually cancels them. Because, so we enroll them on December 15th for 1/1, December 31st, you tell CMS they didn't pay, it actually cancels.
We don't cancel, CMS cancels them.
Yeah, so you can't, so for those, if somebody missed September, October, November, then they're fine. In December, you can enroll them for January 1st. They don't have to make those back payments. But if they're in a grace period for October, November, December, and you're enrolling them for 1/1 with that same carrier, it's not gonna work. Because they're gonna want either the 3-month grace period back, or you enroll them and they may make 1-month payment, it's gonna get applied to October. So
Yeah.
it's usually what we end up doing if somebody absolutely has to, is they get 1 month with a different carrier, and then before January 15th, we switch them. So that's kind of the workaround. All right, John, you have a question.
Yep, and I apologize if you've already answered this, but I just wanted to ask the question. Is there going to be any way that when working through Health Sherpa or anything like that, that we can enable auto pay?
I don't know about Health Sherpa. We have auto pay for our own portal system for us. In Wisconsin.
It doesn't allow us to do it when we do the payment from, Health
You can
Sherpa
only do
takes
the
us to a
initial
payment
payment.
portal, and we can't.
Okay.
And it would make all of our lives exponentially better.
So
Sure.
here's the question that I want to know. Why do you have sent all the information to CMS by the end of September, correct? They have everybody's stuff. Any idea why they wait till October 28th to let us know the plans?
No.
So you guys have no idea. You also send all the current contracted doctors and prescriptions to CMS, and it is never right during open enrollment. So it's usually right about March is when it seems to be accurate, but just agents, just so you know, it's not the carriers. They have been sending it to CMS since day one, and it has never been correct since day one. Always wait. Don't rely on the Health Sherpa tool or healthcare.gov tool, because 1 year, Common Ground, the name of the plan was Common Ground Bellin, because they had contracted with Bellin, and the system was saying Bellin wasn't in the network. And I had to argue with a client. I'm like, it's in the name. It's called Bellin. So just remember that. So Ruth wants to know, who do you contact to get contracted? And that is the one nice thing. Common Ground is actually, for us, it's a direct enrollment or direct contracts. They don't use an FMO. So
Yep, and you can reach out to our sales team. Jen, just put the email.
Just put it in there, yeah.
And we will get you appointed.
So podcast people, it's sales@commongroundhealthcare.org. And they're great to work with. I mean, I can't tell you how many wonderful times we've had to call them because somebody's at the pharmacy, their prescription wasn't working because they were like $2 short. We paid the $2. They walked across the hall, made sure the prescription would work for that day until the payment went through and processed. I mean, and they're not the only awesome company. There are other ones out there. Get to know your carriers, even the big guys. If you can find somebody who's there consistently, send that person flowers at the call center. Like, try and get yourself into an inside person. Thank you very much, everyone. Jennifer, thank you so much for coming on. I appreciate you taking time and making PowerPoint to explain this. If anybody's got more questions for a carrier, let me know, but I will see you all next week.
Everyone.
All right. Thank you very much.